Good evening. Welcome to the ShadowTrader video weekly for Sunday, May 27th, 2012. Happy Memorial Day weekend to all of the viewers out there. When we analyze the markets, we need to constantly ask ourselves three questions over and over, both on an intraday basis and also on an end of day basis when we're analyzing the charts, and say to ourselves, what is the market doing at this juncture? What is it trying to do, and how good of a job is it doing getting there? The first question deals with overall bias. What is the market doing? So what the market is doing right now essentially is it's consolidating after a downtrend. It's in a downtrend. I think the market is essentially going down, but currently it's in the middle of a consolidation area where some of the sellers are being taken out of the market. Some of the short sellers that are in this down move here are being taken out of the market as they're covering their position. And we're going to take a look at market profile shortly and analyze this chart more in detail and try to see what types of buyers and sellers are coming into the market so that we can better answer these three questions. Okay. The second question, of course, is what is the market trying to do? I think the market is trying to lift here, to be honest with you, because if you look at the chart here, or the Fibonacci retracement, everybody seems to be kind of thinking the same thing. I follow other advisory services to get a handle on what other guys are thinking, to try to give me sort of a perspective on what the traders en masse are thinking. I think everybody kind of is generally of the same mindset, and people such as myself who have advisory services, it's usually a smattering of a lot of the same. So you have a lot of reports out there of the market trying to bounce and people wanting to get short at higher levels, essentially, right? I think that this 38.2 fib retracement and this 50% fib retracement are going to be key in the coming week. That's what a lot of people are looking for. So as far as what the market is trying to do, it feels to me like it's trying to move up into that level. And these levels are going to be really important in the coming week, because notice that they also tie in with the backside of the channel. Here, the channel is defined here. It's a new downtrend channel, right, as opposed to this channel here, which was up. The new down channel is defined by these two highs here, and then I brought it down to this low. And you can see here the backside of the channel is around 1330 in the SPX, and then you've got your 38.2 fib retracement there. And notice that your 20-period moving average is rolling over, and it's going to knock prices on the head right in between those moving averages. So this is what I think the market is trying to do. Is it's trying to lift a little and bring itself either back into the channel where I think new money of the short side wants to step in. But at this juncture, it doesn't appear that it's stepping in yet. And in knowing, as I'm about to show you, that the new money, meaning new sellers, bigger players, aren't really stepping in yet, it answers the third question of how good of a job is it doing getting there, which right now is poor. The market is essentially, I think, doing a poor job getting a little bit higher. And in knowing that and in seeing that, that answers another question for us, right? It kind of gives us more confidence maybe on the short side, tells us that there's possibility that the market may not even make it, to look up to the 20 MA or the 38.2 fib. Remember, it doesn't have to. It can roll over right here next week. There could be news that can start to sell off immediately. Okay? So that's essentially the three questions and the technical picture of looking at the market right here. So now let's go into the profile of what's going on in the ES, and we're going to look at some key things that I've been looking here in my narrative. I've been very diligent recently in the blog in keeping the narrative going, and I want to keep it from sort of a starting point. And whenever there's a end point to a move, that's usually a very good place to start your narrative if you haven't done so yet. Remember, your narrative is the information of every day's trading that you carry forward day after day to help you to mold this sort of bigger picture of where the next large move is going to be. I'm of the opinion that the next larger move is going to be down to S&P 1250, and I think that my narrative is starting to support that, but I take it day by day, and whatever information happens each day, I carry it forward and I add that to the narrative. Okay, so that being said, let's consider that we're going to begin the narrative from down here at the end, which would be May 18th. All right, so knowing so, we go back. So starting our narrative from the 18th lows, right? May 18th we know is the low in the market. We'll start there. Scrolling down a bit, you can see here probably a lot of the traders on the 18th got short at the wrong prices, which makes perfectly sense because that's the only way that a market can, that a trend can end, right? It was the end of the down move, so obviously if people are getting short at wrong prices, they're getting short too low, the move has to end. And we saw that on the 18th. The evidence of that was that value was actually up here. Here's the point of control. You can see here's where the fairest price is, where most people traded. According to the TPOs, it's here, how wide they are at the widest point at 1303. The most volume was here around 1304.75, and yet the market closed down here. So it tells us that a lot of these traders here are getting what Dalton calls short in the hole. And that's his term for they're shorting at bad prices, and lo and behold, that was the end of the move. Moving forward then to the next day, which was Monday the 21st, you had a lot of short covering, and that's evidenced by the fact that the profile was elongated at the bottom. So it's skinny at the bottom and fatter at the top. It's sort of like a letter P. That's short covering. But remember that whenever you have short covering, it doesn't strengthen a market, it weakens a market, because what it does is it takes buyers out, and buyers are the fuel for a rally, right? Just as sellers are the fuel for a downtrend in the market. So in this short covering, a lot of buyers were taken out of the market. On the 22nd, the profile is really interesting because new shorts, I think, were entering the market again at the wrong time, because you had a little bit of an upswing on the 21st, and yet here we also saw a similar situation to the 18th, where traders were again short in the hole. Notice that all of these, the market closed here at the asterisk of the close, sold off all the way down to here. The only way that a market can sell off is if there's more sellers than buyers, so you have to imagine that a lot of these are new shorts entering the market, but they're entering the market at the wrong time because you have value much higher, right? This is really where value was established much higher, and the point of control was very high. And this POC is going to be important coming into the next week, which we'll talk about in a second here at 1325. So that's what happened on the 22nd. On the 23rd, we had this huge bottoming tail, which technically would be an indication of strength. When I say bottoming tail, if you look at the S&P here, it was this candle here on the daily. And you would think that would be an indication of strength, but to me it seems like it's really just short-term traders that, in the same way as they got too short in prior sessions on the 18th and 23rd, it seemed to me that they got overly long here at bad prices on the 23rd, because notice that value was actually established lower. This is where traders think is value, down to 1300. So there's price acceptance down here, but then out of the blue, for whatever the reason was, you see that the market got a little bit overly short. Shorts wanted to cover very quickly, and what happened? You had this very violent rally to the upside, and again, though, it was very skinny profile, not a lot of value in that area, so the market kind of switched very quickly, I felt, from being overly short to overly long, right? And I'm gonna, once we finish this narrative on the last day, I'll explain to you where I'm going with all this, if it seems like it's sort of counterintuitive because it just goes back and forth, but I'll explain in a moment, right? So that brings us into the last 2 days of the week, which is the 24th and the 25th, which were really just balancing days. Two things that I thought were interesting about these days. When I say balancing days, I say because profile was balanced. This is what's called normal distribution on both days. It's actually relatively rare. It's anything but normal. It doesn't happen that much. Usually you get these different shapes of double distribution, or letter P or letter B. Market is in balance, probably just waiting for the 3-day weekend, more than likely, so I don't put that much weight on this. I did notice that the point of control on Friday migrated only slightly higher than on Thursday, yet value was basically completely overlapping. I'm going to take off these blues here. Value was basically overlapping and identical, so essentially the market didn't really move here. So it tells us that there's price acceptance in this area. Remember, I was saying about the POC on 1325. Notice that this fairest price here, you had multiple days here of a chance to get higher, and you didn't even move to the fairest price here at 1325. So that ties in with what I was saying earlier, where I said how good of a job is the market doing getting there in trying to climb up to those 38.2 and 50% fib levels? I would say not very. But again, with a grain of salt, because coming into the 3-day weekend on Friday, maybe that was the reason. One thing that did stand out to me on Fridays as well, that I'm bringing into the narrative slowly, is this concept of delta, which is essentially just to put it simply, how many ES contracts went off at the bid versus went off at the offer. If the contracts are all going off at the offer, it's an indication of accumulation of buying pressure because people are not waiting to buy at limit, they're just hitting the offer and they're buying. If most of the contracts are going off at the bid, it's an indication of selling pressure. Sellers are in control, they're not trying to limit out, to get out of longs, whatever, they're just hitting the bid. So this little chart here is a delta chart of the ES. The chart here on top, it's set to 5 minute. The chart here on top, and this is from Friday, the chart is the regular 5 minute candlesticks. This is the actual ES itself. And here is the in the bottom chart here is the delta of each 5 minute bar in terms of how many contracts went off on the bid versus how many contracts went off on the offer. So you can see here when the market sells off, the overwhelming majority of the contracts go off on the bid, and then it rises. Market starts to lift, gets off on the offer. But what would I use this for is this sort of divergence in that, let's say the market goes up to say a double top, but you don't see very much contracts going off the offer. It probably rolls over. And where it gets really interesting is what is in the middle chart, which is the cumulative delta of the entire day. This starts at 0 at the beginning of the day, and then by the end of and each contract that goes off at the bid or the offer, it adds or subtracts to it, right, in these 5 minute bars. Well, notice here that even though the point of control migrated a little bit higher on Friday, the delta was very negative. And again, I take this with a little bit of grain of salt only because it was the Friday before a 3-day weekend. Overall volume was very low on this day, but I am adding it to the narrative in that I was watching this delta very closely on Friday, and you could see, right, as if you were trading on Friday, you noticed that any attempt at rally on Friday was sold very quickly, right? There was constant like double tops early on in the day. The market seemed like it wanted to break to the upside, and it just failed. Well, the reason for that was the delta was actually negative, really right since the open. I'll see if I can bring this backwards a bit. See if I can bring this back. And look here. It's still 5:25 was the date. I'm going to go back to like the beginning of the day here. See, notice here, the delta starts off negative right from the beginning. This is the beginning of the day, 9:30, 9:35. Right, the delta is actually negative, 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 and look here. Here's your divergence. Look at the double top in the market. Perfect signal actually from the delta, in that price in the upper chart moves to the high of the day, but at the same time, delta is well off the high of the day, and delta is negative. See, at that point, the cumulative delta was net negative 10,000. Right, and then it just sells off hard, and again market rallies, but delta can't really do anything. So this is something I'm just slowly starting to add to the narrative, and I'm taking note of the fact that on Friday you had value migrate a little bit higher, but delta did not. Okay, so again, back to the big picture. It may seem confusing or counterintuitive, as I was saying before, when the narrative shifts constantly, or the bias shifts from day to day, and I say things like, "Oh, the traders were overly short. They got short at bad prices down here because they closed the market low, but value didn't migrate down with price, right? The POC didn't migrate down." And then I say, "Oh, on the next day they rallied, and it was the opposite. It seems like they all covered shorts en masse, but at the same time they got too long because value didn't the POC didn't migrate up. Value was lower, and yet price closed higher." Okay, so seems like you could say to yourself, well, if it just goes back and forth like that, what's the point? Well, the point is this, is that when the short-term money is in control, this is what's happening. When the long-term money is in control, this is what's happening. Trend. So if the short-term money, which is not the other time frame, as we say in market profile, the OTF, meaning the pension funds, the mutual funds, the larger players that are going to be in the game for 6 months to a year, 2 years, right? They're not buying and selling to flip out for $1. They're not day trading. They're not trading at night. They don't know candlestick patterns. They're not interested in market profile. They need to fill an order to buy 1 million shares of Apple for a client. They don't care about any of this stuff that I'm talking about. When they're in the market, either getting into it or getting out of it, the market does this. They're getting in the market. They're getting out of the market. You have these trends. So if if the profile and the narrative is telling us that it's all just momentum players in the market, getting short at the wrong time, getting long at the wrong time, back and forth, it answers the question for us of how good of a job is the market doing getting there? Remember, we said that the market is trying to go higher, but for now it's not doing a very good job getting there. Well, the reason for that is, in my belief, is that right now the momentum players are in control. The shorter term money is in control. The responsive traders, the day traders, the ones that are just batting it around back and forth. And if that's the case, if they are the group that is in control when the market is supposed to be bouncing, when it's doing its bounce here of going wherever it's going, either to these prior lows, fib retracement, or trying to move back into the channel, then that's probably unsustainable. That's probably a sign to me that the overall trend, which is down for now, is going to continue. So that's essentially how I look at the whole thing. So coming into this week, I'm going to be keeping this entire narrative in mind. I'm going to be constantly continuing to build it. If you're interested in following it every day, it's at ShadowTrader.net. Just click on the button that says blog, and you can follow along with the narrative there. And I'm going to be continuing to like I said, just basically add to that every day. One of the scenarios that we have to look out for in the coming week is the fact that we could possibly... Damn it. Well, the point is simply for us to answer the question of who's in control. If the profile is telling us that the market's just sort of going back and forth, and you have people getting too short, then getting too long, and you have value just overlapping a lot or overlapping to higher, then it tells us that the shorter term time frame, meaning the day traders and momentum players, are really in control here. And that's a really important point to note as we go into the coming of next week, looking at this daily chart again of the S&P, because obviously the whole point of this exercise, we want to know what the next move is going to be. If the shorter term time frame is in control and they're the dominant player in the market, remember that the shorter term time frames, such as those momentum players, they have a very short outlook. So at the first sign of selling, they get out. And because their time outlook is long, they don't hold very long. They're not interested in a long hold. They're essentially buying responsively and selling responsively, meaning the prices get a little high, they respond to that, they sell, prices get a little low, they respond to that and they buy. They're not interested in being in the market for a long time. When players that are interested in being in the market for a long time, the profile will look different, and you'll have larger moves that will trend, such as the move up here and then a sharp move down and this protracted move down here that we just saw. So that's what I'm going to be thinking about coming into this shortened week. Monday is obviously a holiday. Equity markets will be closed. Earnings season is pretty much over. I think the focus next week is going to be on economic data here. Let me just check it out here. I also do want to mention the consumer sentiment on Friday, although again, day before a holiday, light day, did not really push the market higher, even though you had a pretty good reading. So sentiment seems to be on the rise. And coming into next week, I think the focus is going to be on GDP and what else was there? Let me see. I know GDP was one, and the jobless claims on Thursday, I would say, and also consumer confidence here at 10 on Tuesday. Okay. Obviously, going back to the S&P chart, I can't discount Greece, Spain, all the stuff that's happening. But remember, a lot of that is always secondary to what's happening structurally in the markets. We're trying to see if structurally the market is telling us in advance of if any news does come out that it wants to sell off anyway or it wants to rally. For now, it seems to me that with the shorter term money in control during this bounce, no real evidence of new buyers stepping in saying, wow, these are bargains and we're in for the long term. My thesis thus far is that the downtrend continues at some point. We will see a return of sellers gaining control, and then the next target in the S&P would be 1250, which is a 50% Fibonacci retracement from low to high, as I've talked about before. Not to be confused with this move here. This is a Fibonacci retracement that you're seeing here from high to low here. But if you take off this fib and we delete that and we put this on a weekly, and I've shown you this chart before, we can do a fib retracement of the low to high move here. And as I was saying before, halfway is at 1250. So that would be my target for a downward move in the markets to come. All right, I am writing this blog every single morning at ShadowTrader.net if you want to check it out, where I discuss things like this narrative here. Keep it all in perspective. Just go to www.shadowtrader.net, click on blog right here, and you'll see every morning I do an update here. I didn't do one on Friday, and I have pictures of the S&P and pictures of the profile, and describe what I'm thinking in this ongoing narrative where I'm taking the information from each day and carrying it forward. All right? Have a great holiday, guys. Thanks for listening. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.